Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 23rd of January. Starting off with the FTSE 100, which is still near the record levels and well above the old resistance from back in May last year, 84.74, while we're above that on an end-of-day close basis, looking for this market to head to the top of that black rising trend channel, 87.20, hopefully by the end of next month, and then big picture target maybe by the end of the first quarter, or so it's longer, up to 9,000, which is actually the proper red line there, the proper top of price channel level, but the key here is staying above the old May high. 50 and 200 day lines both crossed for a golden cross a couple of earlier in the week, and hopefully that will provide decent momentum for this market. Moving on to the DAX, and here we've not only hit the top of our channel, we've actually exceeded it at 21,200. There's a steeper red channel there, which was from back in October, heading for 21,900. That's what we're looking for by the end of next month, or even sooner, while we remain above the latest gap there at 21,100. Worst case at the moment, I suppose, is a move down to the floor of the channel, 20,800. Next up is the Dow, and here we're well above the rising 50-day line there, 43,500 after a bear trap gap reversal, one of our better setups, and also bullish divergence in the RSI window. Above that 50-day line, 43,600, looking for up to 46,000 at the top of that rising trend channel by the end of next month. Worst case at the moment is a fill of the gap there, 42,600. Moving on to Bitcoin, which I suppose is the market of the moment, and here, slightly disappointing, trading just near the initial January peak there around 102,000 and just a bit below it. Already factored in a range between the 50-day line at 99,000 and recent highs through 108, and it's going to be probably a bit of pinball price action between those two levels over the near term. Moving on to gold, and here you can see that we managed to break the recent sticky resistance there for this market around 27.50. Above that, obviously, record highs from the end of October there around 28.01 or 02 in fact, and then up to as high as the top of the rising trend channel from back in February last year, 29.70 at the moment. Might be seen by the end of March. Let's give it a bit of time there. Ideally, we stay above 27.20, that broken October line in the meantime. Moving on to pound dollar, which actually seems to be slightly better than it has been for a while. The only problem is that we're still bouncing against the old support, the initial January support, 123.50. We managed to sort of overlap that slightly and come back again. While we're below 123.50, or call it 60 now, then looking for this market to roll over or continue its rollover from back in the summer. Worst case is that below 123.50, we have to hit the floor of that channel there at 118, that channel there from the end of 2020. Moving on to the stocks, where Aidan Bishop at Bluebird can't stop buying these shares. Broadening triangle base, we're already onto it before the news of the share buying came through. 1.1 pence the first technical target there, and that's valid while we hold above yesterday's gap floor at 3/4 of a penny. You can also see the 50-day line now rising. So there's more to it than just the direct buying. A bit of bullish divergence there as well for those who are interested. On to Clontarf, which I don't really like covering because it keeps failing, but it's been failing since the summer, but maybe one day we'll get lucky with this one. Here you can see that we've broken back above the 50-day line there, recent support around 0.034, and really looking for a break of that resistance line there from September, 0.04. If we can get through that, then it would be 0.05 in the 200-day line, but as I said, not a great situation even at the best of times. Moving on to stock which has done us proud over the course of the last couple of weeks, Cell AI, and here decent consolidation at our first target there, 0.21. Above that we've been looking for 0.39. Above that as high as 0.6 pence maybe by the end of next month. 50 and 200 day lines rising, so we're in the run up to a golden cross. That tends to be the strongest part of the cycle. That's why we're going for up to 0.6 by the end of next month. Moving on to Fiinu, where its ship came in after a rather long time, and here you can see that If I can get the right stock up, we've got the shares consolidating well, basically just above our old target there. Well, it's the third target there, I think, 6.3 pence. Above that, we're looking for a best case scenario target here, maybe by the end of next month, up to 19 pence. If you're cautious, you'll probably wait for an end of day close through the 10 pence level, which has basically been the highest closing price for the shares. Moving on to GreenX, where if you looked at the news flow, you wonder why the shares are still so low in the range, but it looks as though we are ready to try and rally on full gap to the upside at the start of the year, and we're just about to break that resistance line there from March. Above that at 41 pence, looking for 52 pence by the end of next month. I said the other day that I thought Incanthera was looking as though it's ready to rebound. Obviously, we had the rug pull in the autumn, but I'm guessing that there's been a bit of accumulation here, maybe knowledgeable accumulation. We're just breaking that 50-day line there at 7 pence. Above that, looking for up to 18 pence by the end of next month. Gap to fill at 14 in the meantime. Ideally, we stay above December support there at 4 pence in the meantime. In fact, ideally 5.5 pence, which was the floor of the gap and initial January resistance. Moving on to Mindflair, and here its rehabilitation continues. We've got the 50 and 200-day lines rising. The directors got their options, I think, yesterday, and an investment announced today. Initial target here up to 1.5 pence, and above that looking for a best case scenario target now up as high as the 3.25 pence level, hopefully by the end of next month. But obviously we're looking for that sticky resistance near 1.5 pennies to break first. Moving on to Nostra Terra, where Premier Myton have stepped up to the plate. One could argue that's quite brave, but anyway, it's much appreciated. And we've got the top of the range here up to 0.06 pence, looking for that by the end of next month, while we remain above a recent support, 0.0375. Shield is next, and here it may be regrouping with a bear trap effect, really, from below 2.6 pence. Above that, looking for looking at the run up to a golden cross over the next couple of weeks, and looking for the shares to retest 5 pence plus early, or at least by the end of February. Moving on to TM17, which is obviously not to be confused with Heaven 17. Here you can see a broadening triangle gapped up here through the 200-day line. Initial target here at 290 pence, and after that at the top of the range, and a resistance line there from back in February as high as 340 pence, hopefully by the end of next month, while we remain above the floor of the gap at £2.40. Finishing off with the stock which I don't think I've ever covered before, which is Watkin Jones, and here you can see that we've got a bear trap island reversal, one of my favourite setups, so gapping down back in August and gapping up now. That means that we're looking for at least the top of that broadening triangle base at 29 pence, and ideally, obviously, over the next couple of months, back up to 50 pence, maybe by the end of March. But the key here, holding that 50-day line at 20.75 pence. That's it from me today. More updates tomorrow.